So, what if the biggest warning signal for a market crash isn't some complex chart, but just one guy quietly walking away? And what if that one guy is the same person who famously called the 2008 financial crisis? Well, he just did it. He walked away from the entire game. Something huge just happened, almost silently, and believe me, we need to figure out exactly what it means.
This right here, this is the chilling message Michael Burry sent his investors just weeks before he vanished from the public markets. I mean, just read that sentence. It's a devastating takedown of everything that's happening right now. The guy who built his entire reputation on finding value where nobody else could is now saying that value itself is basically broken. He's not just saying the market is wrong, he's saying it's completely unhinged from reality.
Okay, so let's get into it. To really get the weight of Burry's move, here's how we're going to break this down. First, we'll look at the disappearing act itself. Then, we're going to dissect his final, massive bet against the AI revolution. We'll dig into his core argument that this whole boom is built on fraud. Then we'll look at the flip side. Is he just too early? And finally, we'll see how this all fits into a historical pattern that is, frankly, terrifying.
So, first up, what actually happened? Well, on November 10, 2025, Michael Burry's famous hedge fund, Scion Asset Management, officially terminated its registration with the SEC. Now, this wasn't some quiet retirement. This was a move, a statement. See, you only need to be registered if you're managing over $100 million. Scion was way over that, so this was a deliberate choice to step outside the system.
And what's really wild is when you look at the history here, this is only the second time in his entire career that Burry has shut down a fund like this. The first time? 2008, right after his massive win betting against the subprime mortgage market. But that first closure was like a victory lap after he was proven right. This time feels different. He's not leaving after the crash, he's getting out before it happens.
So here's the crucial part. It's how he's disappearing. Scion is morphing into a private family office, and this is a huge deal. A family office doesn't have to file those quarterly 13F reports that tell the public what a fund is holding. So from now on, we're all flying blind. We have no idea what his next move is. He is effectively going dark right when the market seems to be at its most euphoric.
Okay, so before he went dark, did he leave us any clues? Oh yeah. His final public filing is basically his last will and testament to the market, and it reveals a single massive bet, a sniper shot aimed right at the heart of the AI revolution, targeting its two biggest stars, Nvidia and Palantir.
And the numbers here are just mind-boggling, clearly designed to grab headlines and show you how serious he is. The filing showed Burry was holding enormous bearish positions, basically betting the stocks would go down. Against Palantir, he had puts with a notional value of $912 million. Against Nvidia, the undisputed king of AI, another $186 million. You add that up, and it's over $1 billion, betting that these supposedly unstoppable companies are about to fail.
But, and this is super important to understand, we have to separate the media hype from the reality of the trade. That billion-dollar figure is the notional value. It's the value of all the shares his contracts control. The real question is how much of his own money is he actually risking? Well, for that giant $912 million Palantir position, the premium he actually paid was reportedly $9.2 million. Still a ton of money for sure, and it's cash he's literally willing to burn if he's wrong. That's how confident he is.
You know, what's even more telling than the size of the bet is the timeline. These are not short-term plays trying to catch a little dip in the market. No way. The expiration dates on these options go way out, into 2026 and even 2027. And this detail is everything. Burry isn't betting on a quick correction. He is setting up for a long, brutal, multi-year collapse. He's signaling that when this thing finally goes, it's going to be a deep, dark winter for the whole tech sector.
So now we get to the core of it. Why is he making this bet? This isn't just about stocks being too expensive. His argument is so much bigger. It's almost heresy. He's saying the entire AI boom isn't just hype. It's built on a foundation of systemic, coordinated accounting fraud. He's arguing the insane profits we're seeing from the biggest companies on Earth are basically an illusion.
And his case really comes down to three main points. First, a very specific type of accounting trick he calls depreciation fraud. Second, this idea of an AI money go-round, where money just moves in a circle to fake real growth. And third, the spooky parallels all of this has with the dot-com bubble from the late 90s.
This slide shows that AI money go-round perfectly. Burry says the whole sector is just a closed loop. Money gets passed from one giant to another to make it look like there's explosive growth.
For example, Nvidia invests a ton of money into OpenAI. OpenAI turns around and gives a chunk of that cash to Oracle for cloud services, making Oracle's stock jump. Then what does Oracle do? It places massive orders for chips from Nvidia, completing the circle. All their valuations go to the moon, but is any new value actually being created, or are they just inflating each other's balance sheets?
Okay, now for the most specific claim, this idea of depreciation fraud. So tech giants are spending billions on these AI chips. Everybody knows this. Hardware becomes obsolete fast, right? Like in 2 or 3 years. But on their accounting books, these same companies are pretending the hardware has a useful life of 5 or 6 years. By spreading out that cost over more time, they make their annual expenses look smaller and their profits look way bigger than they actually are.
And in Burry's eyes, this isn't just some clever accounting. It is a massive, deliberate deception. He's even put a number on it. He estimates that this one trick alone will understate true expenses by a mind-blowing $176 billion by 2028. He's saying this will lead to companies like Oracle and Meta overstating their real earnings by 20, almost 30%.
So you're probably thinking, if his case is so strong, why close the fund? Why not just ride this bet into the ground and become a legend all over again? Well, this is where it gets really frustrating and complicated. It's this idea that he can be completely right about the future, but totally wrong about right now. It's the classic investor's trap.
See, here's the flaw in his immediate fraud claim. For now, it's actually not true. The market is in the middle of this historic chip shortage. There is so much demand for AI power and so few chips that old hardware isn't worthless at all. I mean, reports are saying that even 8-year-old Google chips are still running at 100% capacity. They're not obsolete, they are critical. So when companies say that hardware has a longer useful life, you could argue they're just reflecting the current reality.
So Burry's thesis isn't wrong, it's just early. He's waiting for that moment, that inflection point, when the supply of chips finally catches up to demand. The second that happens, the value of all that old hardware will crash to zero, overnight. And at that point, these companies will face what's being called a depreciation bomb, a catastrophic accounting write-down of billions of dollars, vaporizing their profits and proving Burry was right all along.
And this quote just says it all, doesn't it? It perfectly describes Burry's trap. He's making this fundamental, long-term bet that the bomb is going to go off. But his investors, they're just watching the market hit new highs every day and seeing his short positions lose money. They're not willing to wait 2 or 3 years for his thesis to play out. He's a genius who's being forced to fold his cards, not because he's wrong, but because he just can't afford to wait for the market to finally admit he's right.
Okay, now let's zoom all the way out. Because Burry's exit isn't just about him. It fits into a historical pattern that might just be the single most reliable crash indicator that we have. This isn't happening in a vacuum. This is a historical alarm bell ringing loud and clear.
And the pattern is it's unambiguous. When a legendary investor publicly says this market has lost its mind and walks away, a collapse is coming. In 1929, Jesse Livermore shorted the market just before it crashed 89%. In March of 2000, Julian Robertson closed his fund at the absolute peak of the dot-com bubble. 1 month later, the Nasdaq collapsed. In 2008, Burry did it himself. And now, in 2025, he is doing it again. The smartest player on the board is walking away.
And look, this isn't just about stocks. The real economy is already showing huge cracks. While the market is soaring, totally disconnected from reality, the next generation is feeling the pain. Youth unemployment for people aged 20 to 24 has shot up to 9.2%. That's the highest it's been since 2016. So this AI revolution that was supposed to bring prosperity for all, it's already leaving young people behind.
This chart just lays out how fragile the whole system is. The health of the market isn't a reflection of the broad economy anymore. It's an illusion created by just a handful of giant companies. The Magnificent Seven make up a bigger slice of the S&P 500 than at any other time in history. This isn't a healthy rally. It's a dangerously narrow, top-heavy market that's hiding a lot of weakness underneath. The fate of millions of people is resting on just 7 companies.
So how are the CEOs of these companies responding to all this? Are they using data? Logic? No. They're using emotional, evasive rhetoric. Alex Karp, the CEO of Palantir, got asked about Burry's bet against his company. He didn't even try to justify his company's insane valuation, a PE ratio of over 500. Instead, he called Burry short an attack on America. It's a classic diversion, right? A way to sidestep a terrifyingly simple question about the math. So Michael Burry has seen this movie before. In 2008, it was fraudulent housing debt. In 2025, he's saying it's fraudulent AI earnings. But the script is the same: easy money, wild speculation, and deceptive accounting. The man who called the last great crash is screaming from the rooftops that the math just doesn't work anymore, and he's leaving us all with one final haunting question. The smartest player has left the board. Who's going to be left holding the pieces when this game finally and violently comes to an end?